Hello guys and welcome to accountsarmy.com. In this video tutorial we are going to learn about the whole accounting process, or you can say the accounting cycle. So basically there are around 5 stages in accounting. So the first stage starts with the transactions. Then you need to pass the journal entries, then you need to post the journal entries into ledger, and then you need to prepare a trial balance, and then at the end you need to prepare the financial statements. It's very easy. So first of all we need we're just gonna see what transactions are. So it's the most simplest basic common sense kind of thing. So the transactions are, the transactions. What else do any economic activity done in the business is called a transaction. You can define something like that. But basically when you do an economic transaction, something that is related to money, you need to account those into your books of accounts. So each and every transaction that involves money, you need to record that. So you need to list out all the transactions that have happened during the accounting period or financial period, and list them all so you can account those properly. So the first stage is to list out all the accounting transactions. Okay, so here we have what we have done is we've created an example company. So let's assume that there is an ABC Private Limited. This is a company. We've started a company. So we have taken a loan of 15,000 rupees. Sorry, 5,000 rupees. We have introduced our own capital of 15,000. We have taken a premises for rent around 1,200 rupees per year, and then we have done some purchases and some sales, and then we have paid a bill, electricity bill. So this is let's just not go into that. So this is the transactions. So this is stage 1. We have done listed out all the transactions. In stage 2, we need to record this transaction into our book of accounts. So we what we will do is we will just create a journal book. In this we will record each and every entry like this happened in the business. So first of all we introduced capital. So where are we gonna record this? We are gonna record this in a journal book. So here we will exactly know that on which date, actually here the date column will come. So you can exactly know. So 1st of April we introduced 15,000 as capital into our book of accounts. So we will exactly know that on 1st April the capital was introduced by the owner of the business in cash. So the whole purpose of the journal books is we will know exactly how, each and every transaction happened in the business. So on second date we took a loan of 5,000. So we will exactly know that on this date, this particular date, 5,000 was introduced by way of loan. So our cash account increased on the, let's say, sometime in the middle of June we paid around 1,200 for the whole year as rent. So we will exactly know that and these date the transaction happened, that some purchases happened, some sales happened, the electricity bill was paid. So in this way we will exactly know that on which date which particular expense was occurred. So let's assume that you have a business, you are selling mobile phones. So every day you sell around 100 phones. You have a big showroom kind of thing. So every day you sell 100 phones. So by the end of the year you will be having around 36,500 mobile phones sold. So how are you gonna account all those transactions in around 36,500 just sales? So there must be around 36,500 purchases, there must be around hundreds of bills paid, hundreds of expenses occurred. So how are you gonna account all these transactions? So what the stage 2 of accounting is, you need to record each and every transaction. So you will have a huge book, but don't you worry, you will have a huge book. So this book will help you account each and every transaction. So you want to know on which date you have done this many transactions, on which date you have done this many transactions. You can just go to the book and you can just open the dates page, and then you will get all these transactions. So the main aim of the journal book is to get to know the detailed aspect of every business. But this is not good for if you just want to analyze your accounts, if you just want to see how many cash transaction has occurred in the whole year. So this is not good. So for that you need to create a ledger, or accounts, particular accounts. So this is a cash account. So here it's stating that we have brought 15,000 in cash in our business. We have brought 5,000 in cash as loan. we have brought 15,000 in cash as sales. We have done sales of 15,000 in cash, so 15,000, and then we have paid rent of 1,200, then we have paid electricity bill of 2,400, and then we have paid 12,000 for purchases. So at the end of the year we have 19,400 as balance. So this is very good. So if you just want to look at the cash account of the business, if you just want to look at the sales, here you will get exactly what you need. So the main purpose of this creating ledger accounts is, you will get exactly what you need. So if you just want to look at the rent, here only I've only taken one transaction to make the overall process simpler. So we have done 15,000 in sales, we have done 12,000 in purchase, we have done 5,000 in loan, we have brought in 15,000 as capital, we have paid 24,000 in bill, and then this. So the stage 3 is to account is to post the journal entries into ledger. So what the system is, if you just look at the cash account, let's just clear all this stuff. If you just look at the cash account, so what you have to do is, here cash account is debited because cash comes in. So if you this is just a disclaimer. If you are not understanding the debits and credits and why the cash account was debited, I will explain each and every step, the concepts in clear. Here I just want to explain you the basic the basic framework. So if you're just not getting it, don't worry, you will get this stuff later on in each and every each and every concept video. But here just look at how the framework of accounting is done. So here cash account is debited, so in the cash account we're just gonna debit it by 15,000. So here it is debited, so here it will we will debit it here, and then we will credit it here. So this in every the every debit has to be credit, every entry which is debited, it has to be credited somewhere in the account. So here you can check, it's double entry system as we all know. So here you can check like this, and then loan it has to be credited over here, and then sales it has to be credited over here by sales. Okay, then rent it has to be debited somewhere in the rent. So here basically we will create accounts, each and every account, and then the next stage is to list out all the accounts. So let's assume you have 500 stores, like you have 500 mobile phone stores, and you are selling 100 phones each day in each store. So at the end of the day you are selling around 50,000 phones a day, so that will be around hundreds and hundreds of phones every year. So if you just want to look at how many sales you have done, you're not gonna look at the whole sales account. You can do for one single you can just want if you just want to if you just want to see how many sales you have done in each store, you can just see in a single store, you can just see by opening that account. But if you have 500 stores, you're not going to look at all the 500 freaking stores, it will be very cumbersome. It will. So for that we have created trial balance. So in trial balance we just need to find out the total. So if you have if you have 500 stores, here you can look that, dude, I have 500 stores, I have like 15,000 rupees in sales. If if you have 500 stores, the sales is around 15,000 crores. You here you can just see that the total sales is this, and the total purchase is this, and the total. So the trial balance is basically a total of all the balances from the ledger. So here if you can see the cash account balances, the cash account balance is 19,400. So we here, as it is a debit balance, mind well friends, when there is a credit, when there is a balance on the credit side, it's called debit balance, because we need to write it here in the debit side. So here, as it is a debit balance, we are going to write, and as it is our assets are debit, so we will write it in the debit side. Then the sales balance 15,000, it is a credit balance, so we will write it over here. And as and so on and so on, we will write each and every balance in the trial balance. And if the trial balance tally, it will give you a great sign that you have done accounting in a correct way mathematically. Because friends, if you have done mistake twice, it will tell you also. So for example, if you totally forgot to write purchases in cash in both in purchases, so it will tell you because the cash will also increase and the purchases will not be there, so it will tell you. But most probably it will give you a sign that you have done accounting right mathematically. But nowadays, the whole accounting system is being done by software, so the point of this telling is not it's not that relevant, because softwares don't do mistakes like this, like omitting some transactions or stuff like that. So in the trial balance you will list out each and every balance, the total balance, the debit balances and the credit balances, and the total must be same. So after trial balance we will create financial statements. This is the main, this is the three statements which are very crucial for your business, because this will show you how much money you're making. At this stage you are not aware how much money you have made till date, because you just can't know, you have not find out the profit. So for that you need to create these three statements: profit and loss account. The first is trading account, the second is profit and loss account, and the third is balance sheet. Trading account is, is the main where you will write, is the main statement or account where we will calculate the profit of the business, which is mainly from trading. So here only direct expenses are included. So here we will get gross profit, you know only direct expenses. So here we will know basically what our trading activities have earned us. So we have, done 12,000 in purchases, and then we have paid, we have sold those goods for 15,000, so we have made 3,000 of profit. But we have, paid rent of 1,200, so we have grossed 1,800 rupees. And then from that 1,800 we have paid a bill of 2,400, so we have, lost 600 during this financial year. but but we have lost 600. But as is the starting of the business, we have lost some money. But the main aim of teaching you this is trading account, this is profit and loss account. So here we will list out all the purchase, all the sales, the opening stock, closing stock. We will cover that later on in the detail in the trading account chapter. And then there is this is profit and loss statement. Here we will list out all the indirect expenses which are not directly related to trading but are related to the business, like electricity expenses, like electricity expenses, or there can be some indirect expenses like low finance charges or stuff like that, etc., etc. So there can be hundreds and hundreds of expenses in businesses, so we will need to list out each and every expense over here. And then this is the balance sheet. So at the end of the year, what are assets and what are our liabilities? So as we brought in 15,000 of capital and we have lost 600, our net capital will be around 14,400. Then as we took loan of 5,000, it will show in balance sheet, and then we'll took a cash, and we have the cash balance of 19,400. We need to show it over here. So as our balance sheet is tallied, we can, confirm that great, our this our accounts are correct. And in this way the whole accounting procedure is done. So from the transaction stage we pass journal entries, and we create ledger accounts, and we transfer all those balances to trial balance, and then we create financial statements. Hence I hope you have understood the whole accounting procedure. If you do not understand the core concepts, it's okay, you just need to understand what the whole process and the flow of accounts is. So I guess you understood if you have understood the flow, you have done a great job. If you do not understand, you can easily comment in the comment section below, and I will answer each and every question for you. Thanks.